A bigger picture here, David Dietze is here, Managing Principal, Senior Portfolio Strategist, PPAC Private Wealth Management. Thank you for being here. We just talked about how, it's coming back. We're up off the lows, but it has been a wild run of late. Tell me your thoughts.
Yeah, roller coaster. So in terms of today, I think the two key indicators that market participants are watching is Nvidia and that 10-year Treasury. Both of those instruments started to turn around during the day. We saw the 10-year Treasury get down to 4.13, and everyone was starting to whisper the R word. There's nothing worse than stocks than the R word, and if people are piling into the 10-year Treasury, it means they're afraid of the economy coming apart at the seams because of the tariff threat. But we saw that bond come back to life there. Nvidia, of course, no stock symbolizes the AI revolution like Nvidia. And I think people start to recognize that no matter what the tariffs are, no matter what the geopolitics are, this AI wave is going to be big. And it's going to be big for productivity. And when they saw the granddaddy of them all, Nvidia, start to pop up above the green line, I think people got their mojo back. The other thing that was very interesting today is whispering of the Trump put. We know no other president in history has ever been more concerned with the stock market and its health as a barometer of how well he's doing. And so I think a lot of people say, we've talked about the Fed put, but today we have a presidential put. So if things get bad enough, there's going to be a nice little retreat. Finally, I'm going to mention the Wall Street Journal column that talked about the tariffs being the dumbest idea ever. And of course, Premier Trudeau keyed on that when he had some comments today in the news at 10:30. And so the point is that Wall Street and the investment community was losing faith in the whole tariff concept and how far Mr. Trump had pushed that. And I think ultimately that too may have given the market some sense that this isn't going to last too long.
It's very interesting. I had a conversation about recession because I did see something online here coming up on my live feed saying how many of the analysts or economists started to look at recession. I had on Andrew Brenner earlier today. I said, are you expecting recession? He said, no. He definitely was not expecting a recession. Did expect the Fed to cut a few times, though. He said 3 times, maybe more. But it's interesting. People scooped up Nvidia, right? The low on Nvidia today, I think, was 110. 110.
Yeah.
Okay. Would you buy Nvidia at 110?
So I have a stock that we're going to talk about later on, which is a close cousin. So I love Nvidia. Do I want to pay 30 times sales? Not particularly, okay? And so I'm looking for companies that can benefit from this AI revolution, perhaps be a beneficiary, or software companies that can take the AI and make it into products that we can all use, as opposed to just going with the one that the herd is chasing.
All right, so since we promote it, not Nvidia, instead you like?
Supermicro. So why Supermicro? Well, so Supermicro is helping build out the AI infrastructure with their work on data centers and other computing devices that can work off AI. The stock got up to 122. Right now, I think it's just under 40. It got beset by problems that have nothing to do with its position in the AI food chain, but rather accounting issues, potential delisting, and accounting. An accountant quit, but they've got new accountants. They solved their delisting problems, and the stock right now at 39, I think it's one of the top performers in the S&P 500 today, is trading at just over 10 times earnings. So I'm thinking like, hey, I got my AI play without having to pay a nosebleed valuation. And I love the fact that Jensen Huang, the CEO of Nvidia, the other day gave a shout out to Supermicro as one of their key partners in furthering the AI revolution.
Yeah, I mean, there was certainly a lot of concerns, and then they settled that and not to be delisted. It has had a lot of volatility. At one point, it was $17 and change last winter, like maybe November, December time. Now at almost $40. So we'll continue to watch that. What's the big picture here? Are you worried about a recession or no?
I think recession is part of economic life. No one can really predict it. I do think the Fed has kept interest rates too tight for too long. So I think it's a risk. Having said that, I do believe in the market's now pricing in potentially 3 rate cuts by the Fed, and that will be helpful. I do think when push comes to shove, the government will do what's necessary necessary in terms of fiscal spending, because the bond market doesn't seem to be concerned about the excess of debt, so I think they'll continue to spend. And of course, one silver lining to what's going on geopolitically is now we have tremendous fiscal stimulus that's going to occur over in Europe and perhaps other countries as they realize they've got to pay, or at least cannot rely on the United States for their defense, and they're going to be spending billions of dollars to build out their capabilities. That's going to be manna from heaven for economies. So ultimately, I don't think that the recession is your base case here.
And you're getting the cuts from the Fed, and that'll help as well. You had a couple of other names that you liked in light of the fact that you do think it'll probably be a decent economy, it sounds like. And you had ConocoPhillips on there, as well as ADM.
Yes,
Archer
absolutely.
Daniels,
Yeah.
right?
So, yeah, Archer Daniels, they've paid a dividend for 92 years in a row. They're a dividend aristocrat, which means they've hiked that dividend for more than 25 years in a row. They're like the backbone of commodities and commodity trading at about 12 times earnings. The stock was 66 last July. Now it's 46. I think you can get back up to that 66 in the next 24 months. That's a 40% return plus your 4% plus dividend. What's not to like there? ConocoPhillips, oil's been down, but I think ultimately China will get some stimulus going. I think that Conoco also, I think, is one of the best managed of the energy companies. Very low debt, trading at about 11 times earnings, nice dividend, and you never know, under the new administration here, there could be a little more M&A activity. Who's to say that a company like Exxon wouldn't ultimately take a swipe at ConocoPhillips? You can't rule that out either.
All right. Well, David Dietze, great to have you on, and I think viewers love to talk about Nvidia, so they'll be happy to have heard maybe an alternative to Nvidia that may be more affordable for them. Thank you. David Dietze, great to see you at PPAC Private Wealth Management.